Beyond the obvious mid and small cap mutual fund winners this year, thematic funds have emerged as the other popular choice. Data shows thematic equity mutual funds have amassed 24,836 crore rupees till November this year, higher than the mid-cap category which saw inflows of 21,521 crore rupees. Thematic inflows are only second to the small cap flows, while the large cap category has witnessed only outflows on a net basis. The robust inflows in thematic funds have largely been mobilized from a record number of new fund offers or NFOs this year. So far in 2023, the mutual fund industry has floated 25 thematic NFOs as against just 8 in the same period last year. Thematic funds invest in stocks tied to a particular theme or sector and are high risk in nature. But investors have continued to pour into them for higher returns in a year marred with volatility.
The basic fact is that in many diversified portfolios, basically you get exposure to some of these sectors, but in a very limited way. That too, generally these exposure in large diversified funds are restricted to maybe large cap stocks. But when we talk about these sectoral funds or thematic funds, here maybe the investor is taking basically a large exposure, maybe 80-90% or even 100% exposure to this sector, wherein the fund manager is also investing in not just large cap but in small and mid cap stocks as well, maybe where the value discovery takes place.
Notably, cyclical opportunities have led to an outperformance of several thematic funds in recent years. Large cap funds on an average have generated 17% returns in the last 3 years. Mid caps have given 27% returns and small cap funds gave 33%. In contrast, PSU and infrastructure funds have outspaced them with 37% and 33% gains, respectively. Analysts, however, suggest avoiding looking only at past performance. Rather, knowing the right time to enter and exit depending on the cyclical nature is more crucial, and one should evaluate the business cycle from an 18 to 24-month perspective, they say.
I think a mistake that one should avoid in thematic funds is really looking at recent performance of funds and thereby looking at investing into it. Thematic funds which has been very popular in the last couple of years, with this past performance, one should really take stock on whether they should continue to look at it. But if it is some new theme where the market setup has changed due to which some opportunities are arising, that makes a lot of sense to look at. So anything which is return based, which is gaining popularity, investors need to get a little cautious, and something which is based on what kind of opportunities are opening up in the future, perhaps merits consideration.
Sachin Trivedi of UTI AMC, meanwhile, believes exposure to sectoral funds should not exceed 10% to 20% of one's overall portfolio. Diversified categories like large caps and flexi caps should have the largest share for healthy long-term returns, he says. Today, on 13th December, markets will react to November inflation data released in India and the US yesterday.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.